Hello and welcome. As we kick off a new year, we're all looking for those big opportunities, right? Wondering where the smart money is going. Well, it turns out the answer might be hiding in plain sight, in an asset that many people have overlooked for a very long time. So let me just ask you a quick question. If you had to take a guess, what do you think was the absolute best performing asset of last year? You might think maybe it was some hot new tech stock or maybe a cryptocurrency, right? Well, whatever it was, it posted an incredible return of 146%. I mean, just let that number sink in for a second. What on earth could deliver that kind of performance in today's market?
The answer was silver. Yeah, I know, it's surprising. But what's really got people talking is that as amazing as 2025 was for silver, a lot of experts are saying that 2026 could be even bigger. So you have to ask, how is that even possible? Well, in this explainer, we're going to break it all down for you. We're going to look at three huge things happening right now. First, there's a historic global supply squeeze that is getting tighter and tighter. Second, we're seeing some really unusual alarm bells ringing in the financial markets themselves. And third, the U.S. Federal Reserve has made a major policy change that could just pour fuel on this fire.
All right, let's start with the most basic thing of all, supply and demand. And believe me, when it comes to silver right now, the situation is anything but basic. You see, for the last 5 years in a row, the world has been in what's called a structural deficit for silver. And you can see it right here on this chart. Every single year, the amount of silver we need for industry, for investors, for all our technology has been way more than the amount of silver that's actually being mined. It's like spending more than you earn, year after year. Eventually, you have to dip into your savings. And those global savings, those stockpiles of silver, are getting smaller and smaller. And this isn't just something a few analysts are noticing. Governments around the world are taking action. China is actually putting limits on its silver exports. Russia has gone on the record saying it's buying silver for its national rainy day fund. But the biggest move might be coming from the United States. This is huge. Silver has never ever been on this list before. By calling it a critical mineral, the US government is basically setting up a flare, saying this metal is vital for our national defense and our most important industries. It's a massive signal that this supply problem is being taken very, very seriously. Okay, so that's the physical story. Now let's move to our second point, because this physical squeeze is causing some really strange things to happen in the financial markets, things we haven't seen in over 40 years. To understand what's happening, we need to talk about a weird-sounding word, backwardation. It sounds complicated, but the idea is actually pretty simple. Think about it like this. Imagine you're at the grocery store. Normally, you'd expect to pay less if you could wait a week for your groceries to be delivered. But what if you were so desperate for food tonight that you were willing to pay a giant premium just to get it right now? Well, that's backwardation. It's a huge sign of urgent, immediate demand for the real, physical. And this slide shows it perfectly. Over on the left, that's a normal, healthy market, where the future price is a little higher. But on the right, that's the stressed out market we're seeing in silver, where people are paying more to get their hands on physical silver right now, today. This is a massive red flag that there's a serious shortage of the physical metal. And the scale of this is just critical. The silver market recently went into its most severe state of backwardation in over 40 years. And, the last time it was this stressed out was way back in 1980, which, and this is no coincidence, was the very peak of the last historic bull market for silver. This stress isn't just about time either. It's about location. Just look at the price difference between the West, on the big exchange in New York, and the East, over in Shanghai. Buyers in China have been paying a premium of $6, $7, sometimes even $9 an ounce more. I mean, that kind of price gap just isn't supposed to happen. It tells you the global market is starting to crack under the strain. And this isn't just numbers on a computer screen. We're hearing stories about it. The CEO of a Canadian silver company actually reported that 2 different Chinese firms called him out of the blue, offering to buy his silver for $8 over the going market price. And then, a few days later, a buyer from India called, offering $10 over. These are the kinds of desperate moves companies make when they absolutely have to get their hands on physical metal. If you like our videos, please like, share, and subscribe to follow us so you won't miss any exciting updates. All right, and that brings us to the third and final piece of this puzzle, the central banks. Because after years of tightening the screws on the economy, the U.S. Federal Reserve has just done a complete 180. As of December 1st of last year, the Fed officially shut down its policy of quantitative tightening. Now, for the last 3.5 years, they were basically pulling money out of the financial system to fight inflation.
But now that's over. They've stopped, and they're moving back towards what they call policy normalization.
So this big pivot has two key parts. First, they stopped tightening. That's step one. And step two is that the Fed is now signaling that they expect to lower interest rates in 2026. And if you look at history, that combination of looser money and falling interest rates has almost always been incredibly good for precious metals like silver. So let's just recap. We have a physical supply squeeze, we have major alarm bells ringing in the financial markets, and now we have a tailwind from the Federal Reserve. So what could all this mean for the price of silver? Let's look at some numbers for context. For decades, silver traders have had this number burned into their brains: $48 an ounce. That was the all-time high price set way back in 1980, and it's kind of acted like a ceiling on the market ever since. But here's the ticker. That $48 number doesn't tell the real story. When you adjust that 1980 price for all the inflation we've had since then, the real value of that peak is closer to $199 an ounce in today's money. That just shows you how much ground silver might have to make up. And what about the future? Well, some market analysts who look at charts are pointing to this massive, decades-long pattern that looks like a giant cup and handle. Now, based on the size of that formation, they're projecting a potential long-term price target of around $400 an ounce. Now, of course, that's not a prediction for next week, but it gives you a sense of the sheer scale of the move some experts think is possible if all these forces keep building. And all of this leaves us with one last fascinating question to think about. In a world where everything, our money, our investments, our very lives, is becoming more digital, more abstract, is a real, physical, and absolutely essential asset like silver becoming more important and maybe more valuable than it has ever been before?